Hello, welcome to Crux Investor. We caught up earlier today with Stephen Biggins. He's the CEO of Core Lithium. They're an ASX-listed lithium developer. We talk about DFS, cash in hand, some of the decisions they're going to need to make quite soon since their updated DFS is complete. If you want our thoughts and opinions on that conversation, some of those topics and the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. Should find that useful. Summaries of other interviews that we've done to save you some time, plus training courses to help you with your own diligence process, and commentary from experts from around the world and a variety of companies and commodities, which you will definitely find interesting and exciting. Plus a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe, friendly environment free from trolling and abuse. If that sounds nice to you, go and check that out at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like, be much appreciated. If you comments below, we'll get back to absolutely everyone. And of course, if you want to see precisely what we talked about, take a look in the list below in the description. Stephen, how are you, sir?
Good, thanks, Matthew. Good to speak with you again.
Well, did you have a good Christmas? Because last time we spoke was like middle of December. Any downtime?
It was a good Christmas. It was a little bit of downtime, probably lasted a few days. And then as soon as I picked up my phone post New Year's, it's been on. So, the year's really started as a cracker.
It was bonkers. I think when I spoke to you in December, your share price had doubled. And I think you went from 9 cents to about the high 30s, it quadrupled again. You've settled down at a more respectable 22. People are paying attention.
Yeah, well, I think there's obviously there's interest coming back into the lithium sector, and as it should. So investors are coming back following equities, but in some ways they're following the commodity price, because the lithium price and chemical price in China's increased somewhere between 40 and 50% over the last few months, and the spodumene price has increased from $350 middle of last year. It was $450 last month. And the last chat I've had is suggesting that prices are now got a five in front of them. So the price is really coming hard, but investors are coming into the sector again, which is great. But they're following the fundamentals, which is the price is increasing and demand is increasing.
But I think the battery metals seem to be working as a cohort. Do you know what I mean? It's like lithium's doing well after 3-4 years. Well, 3 years maybe of people not paying attention to it. Likewise, tin, likewise, nickel, and collectively, people. This thematic is really taking off. I guess driven by what production, EV production in China.
Yeah, well, it's record EV sales all around the globe. So it was China, and then last year was just so strong in Europe. And the last few months of 2020 were at record global EV sales, and then with the change of president in the US, it looks like the US is now going to join China and Europe as it looks to decrease its emissions and stimulate global growth in EVs through a low emission future. And that's where batteries and battery minerals are well placed to contribute to that.
Okay, well, I wouldn't mind talking a little bit of macro with you in a second, if you don't mind. But I always get people to kick off, give us that 1 minute overview for people new to the story, and we'll pick it up from there.
Yeah, sure. So simply put, Core Lithium is Australia's most advanced new lithium producer. We're right at the front of the line of new global lithium production. We're one of only a handful of lithium projects around the globe that can look to start construction this year. We've got a fully approved lithium project producing high quality lithium concentrates out of Darwin in Northern Australia. And we aim to start construction of the project later this year and potentially be in production by the end of 2022.
Fantastic. Okay. Now, there'll be some people who are new to investing in mining, and there'll be some people new to lithium specifically. You're a spodumene producer, and you've got hydroxide producers, and you both talk your playbook. I suspect, given what the price of spodumene is doing at the moment, you've got a good story to tell. What's driving that?
Yeah, well, I think one of sort of the significant points of interest in regards to Core specifically is that we're likely to become part of Tesla's supply chain in the future through an offtake deal that our largest shareholder, a group called C1 did with Tesla in December. And Yahua are going to be supplying Tesla with lithium hydroxide for 5 years. And we have an offtake deal with Tesla to supply, with Yahua to supply them with spodumene, from which they will produce lithium hydroxide and supply to Tesla and other customers.
So in a roundabout way, you're Elon's new best friend.
Yeah, we're likely to become sort of indirectly part of Tesla's supply chain.
Good. Do you think that's what drove the share price spike?
I think there's been a specific interest in Core as a result of that sort of association, if you like, with Tesla. But as a whole, there's it's becoming recognised that we're the most advanced new lithium producer in Australia, and that we're going to be significantly contributing to the lithium battery supply chain in the next couple of years.
Right. Okay. And just more wider than that, the hydroxide producers are, they talk the game of they're going to be first in the queue, right? Because they've got the better product, higher margins, all of that kind of good stuff. Spodumene is kind of the poor cousin. What's your take on spodumene market as a whole at the moment?
Yeah, sure. Is that the spodumene price is increasing in the same way that lithium hydroxide and carbonate is. So the margins in the industry need to increase for new supply to be incentivised to come in. And that's the lesson learnt through 2020. If you don't invest in new supply, and you don't have incentive prices in the lithium sector, then the supply stagnates, it falls behind, and prices increase again. But I think the industry is being more mature, and so I think we'll see some stabilisation, some incentive prices stabilising the sector, because the whole of the EV supply chain needs to grow. So the whole of the lithium battery supply chain needs to grow with a level of maturity and stability, so that they can happen smoothly.
Do you think the incumbents will try to control the flow of product into the market in terms of supply? Because obviously, everyone's talking the story about the demand's growing, and sales would suggest that they are growing. We don't know who's going to be correct in terms of their predictions, but what role do existing incumbents have in terms of controlling that, and how does it affect companies like yours? Obviously, you've got an offtake. You would agree. You'd probably argue that you're fine, but what about the rest of the market?
Yeah, well, there's really there's only 4 spodumene miners in Australia, three of them independent, that represent over half the world's lithium supply. So there's a lot of control now falling back to the primary raw material suppliers in Australia. And now demand is growing, so now those suppliers are in a really good position to control supply in a sensible way, and have some positive influence on pricing too. But
when you say do it in a sensible way to benefit them, but it means that you're not in control. To a large degree, they're in control. So just how sensible do they need to be to allow you to succeed?
Well, I think that the more that the volumes are controlled, the higher the price will go, and therefore the more attractive it is for us and our shareholders to get exposed to those prices sooner rather than later. And that's where Core has a great advantage versus other developing projects around the globe, in that over the last 6 years we've gone through all the approvals process, we've gone through all the engineering and feasibility. So we are now near construction ready, with the aim of making a final investment decision on the project in the next 4 to 6 months.
Right, but what I'm trying to work out is where's that competitive tension sit in terms of pricing for you? Where do you need it to be versus where the other 3 Aussie spodumene producers need it to be?
Yeah, well, if what I'm hearing is right, is that pricing is now, will be profitable as pricing is now, and that the future, based on the level of demand that we are receiving from all the way through the supply chain, all the way through to electric vehicle manufacturers themselves, lithium battery manufacturers, the cathode manufacturers, and the converters, all the way through the supply chain. We've got interest in our product, and it's multiples beyond our capability to supply. So that's the balance that's going.
Beautiful. So you're in control of a lot of moving parts, in the sense that you've got a stack of cash now, over 40 million Aussie of cash. The reality is you're probably looking for some kind of FID soon this year, presumably.
Yes.
What's that dependent on? When would you make that decision? Because you've got your DFS done, you've got a lot of the data. It's all good, but what's holding you back?
Yeah, essentially we're updating our DFS at this very moment. So we've got some sort of final engineering studies we're completing over the next couple of months. Then we'd look to release that updated DFS next quarter, and then present the project to debt finance markets, with the aim on a reasonable time frame of achieving FID by the third quarter of this year.
Have you got a sense of it? Because it's quite a low capex, like what is it, $85 million or so? Have you gone and had any soft conversations about what you can expect to see?
Yeah, we have. So we've had a lot of interest in the soft marketing so far for the debt side. So we expect to be able to access a standard bank debt finance piece. One of the things that's been an advantage, if you like, of being in the sort of the second phase of the lithium industry is that the banking industry around the globe has become much more comfortable with the lithium sector, and certainly alongside the ESG themes and the mandates from banks around the globe, is that they want to participate and contribute to facilitating the growth in the lithium battery supply chain.
So, how do you manage those conversations with the banks? Because obviously 2017, a bit of a spike there in the market, certainly in terms of equities. But then there's washed with oversupply. The market got very, very nervous, and I think that nervousness is still there with some of the financiers. So, how do you have those conversations to ensure them that the market's going to be okay, prices will hold? How do you get a sense of what the future looks like in terms of pricing?
Well, I think the key signal that the banks were looking for was a flattening of the price and an increase of the price, and we've seen both of those things. So I think that now puts us in a very good position to be presenting the case to debt markets for the banking later this year.
Right. Okay. And are you getting, again, you've also got gold. We shouldn't forget gold.
Yes.
Now gold's come off a bit. It's come off a bit, but you were encouraged by what you saw, and the market was quite frothy for gold right up till nearly Christmas time. Are you tempted to just park that up, or is it all guns blazing on that? Now you've got the money.
Well, I think with the cash that we've raised, the largest portion of that cash is going to go into lithium exploration and resource drilling to continue to grow the life of mine of the lithium project. And I think given the level of demand that we have, increasing level of demand that we have, with the opportunity around growing the life of mine, then there are opportunities to look at increasing the capacity of production of the project as well. But we will also, with our lithium exploration teams and drill rigs in the area, there's some really strong synergies to put that into, particularly in our Far East gold discovery, which is only about 5 kilometres away from where we expect the lithium mine and processing plant to be. There's some strong synergies there for us to be carrying out some of that early value add gold exploration alongside that this year.
So, and is there any plans in terms? It's early days, I get it, but at what point do you start making decisions about maybe spinning that out somewhere else? Because a lithium company, gold company, not particularly conducive, not too many overlappings. There are some, but not too many. What do you need to see there before you feel you need to make a decision about what you do with that asset for the benefit of your shareholders? Yeah,
well, I think, as I said, I think quite efficiently we can add some value and understand the value and understand that value more clearly before we look to sort of act corporately with those assets. But when the timing is right, along with our high-grade silver Louis project in the Northern Territory, there is the opportunity to sort of act corporately to create value for our shareholders through possibly separating those assets out in the future.
Right. Okay. But no idea of timing yet. This is just a process you're going to go through.
I think we're sort of, certainly with the silver asset, we've got expressions of interest from other sort of corporates, and both in the gold, and sort of, a number of expressions from brokers who are keen to take those projects to market as well. Right. So we'll work with them, and in our past we've sort of created successful spin-outs. One of them I've done previously, which is a silver one, which was Investigator Resources, with a high-grade silver resource in South Australia. So I've done that successfully before. So when the timing's right, we'll push the button and create value for shareholders.
Okay. Yeah, we spoke to them. Just for people who perhaps aren't, I know this conversation is pretty much about for people who understand the project. Just maybe we'll bring it back a bit. You talk about being Australia's most advanced lithium project. I don't know if that's spodumene or just across the board, but what does that mean? Obviously, you're updating the DFS, but what has the DFS told you about what it is that you've got, especially around the economics, so people know what they're kind of walking into here?
Yeah, sure. So when we say advanced, we say we have all approvals we need in hand from the government to start mining, to start construction, and to be operating both the mine and the processing facility. So we have those things in hand. We've got binding offtake with one of China's largest lithium producers in place already. We've completed DFS level engineering on both the above ground and below ground parts of the project. And in regards to the feasibility, we've got a low Capex, $85 million Australian, to be producing 175,000 tonnes per annum of high quality lithium concentrate at an operating cost that's going to be very competitive with our peers in Australia.
Okay. And just on the offtake components, I mean, again, remind me the terms there.
Yeah, so it's a 4-year contract with Yahua to supply them with 75,000 tonnes per annum of spodumene concentrate, which is about 40% of our production.
Right. Okay. And you wanted to maintain the option with regards to the current remaining 60%. Why was that a good deal? Why is that a good deal for you? Why not offload all 100% of what you've got?
Yeah, well, I think we've got a terrific relationship with Yahua. They've been strong supporters. But on balance, it's good to have a level of diversification in our sort of customer book, if you like. So that's one of our strategies, and the level of interest in that remaining offtake has increased and accelerated over the last few months.
Right. Okay. And what's the plan for 2021 with this cash? Expand the resource?
Yeah. So first and foremost, it's really achieve FID by the third quarter of this year, start construction of the project by the end of this year, and then alongside that, with the cash that we currently have, really go hard on our drilling and increase the resources of the project, increase the life of mine, and then be considering production capacity increases for the project alongside that new information.
Right. Okay. Well, it sounds easy. It sounds like you've got it all cracked.
Well, we've become an overnight success after 6 years. So, I mean, essentially, we've built a really good team. We're in the right place with the right asset, and now that we're funded, we can really deliver on those goals that we've had as a company and as a team over the last few years. And the feedback we've had from the market, both strategically and from finance markets, is we want to support you to deliver this project, and that the product is needed globally by the lithium sector.
And I mean, just in terms of coming back to the macro, about we've seen recently SQM and Wesfarmers do their thing, and so there's some big deals happening. We saw Piedmont with Tesla, and then you've got a Tesla connection yourself. There's a lot more M&A activity it seems, happening at the moment. And do you think that's born out of necessity because some companies were struggling to survive, or do you think scale is going to be important going forward?
Well, I think it's a bit of both. I mean, there was some well-timed and opportunistic acquisitions that were sort of made last year towards the bottom of the market, and that's typically when you sort of see M&A as sort of pivot points in the market. And then there's alongside that, you now see sort of valuations coming back, valuations coming back into the sector as a whole.
And so, what does that mean for you guys? What was the possible implications for you guys?
Well, I suppose we're positioned as Australia's next new lithium producer. If parties want to get control over more supply, then we're possibly part of that mix. But really, as a team, we're focused on delivering this project. We think it's a great outcome for shareholders, for us, because of the low capex and the high revenues. For us to get into production, that's where value lies.
And do you think your offtake partner would be a stick in the spokes of the wheel there if you did want to do something like that, or would that just, again, coming back to the terms under which you've signed that contract, how do you manage that?
I wouldn't want to speculate on that.
Okay, good. Stephen, great update. You should come back every 6 weeks because your share price seems to go crazy when you do that. What should we talk about next? What would be the next thing we'll be talking about in 6 weeks?
Well, I think we'll be talking about the feasibility should be imminent. We should be starting to ramp up our drilling programs, and we'll be talking about our plans for resource growth. And I would suspect we'll be talking about it in the context of even a significantly increased lithium price from where it is now too. Okay, well that'd be fantastic. I mean, do come back on. Like I said, it's been a pleasure following how you guys are doing, but more importantly, how the market's reacting to what you're doing. Because, like you said, after 5 or 6 years of no one really caring, it's quite a nice place to be, right? Yeah, it's satisfying. It's satisfying now, Matthew, but some hard work and tears to get here. And some hard work and tears to get where you need to be too. So good luck with that, Stephen. Stay in touch. We'll speak soon, okay? Yeah, terrific. Thanks, Matthew.